Let's get across the market open now. David Lane joining us from Audit. David, welcome to Tuesday. Thanks for joining us again. Let's start with what we saw overnight. And Wall Street slightly higher. Looks as though perhaps investors are looking past tariffs and now focusing on earnings season.
Yeah, it certainly seems to be the case, Andrew. The US market, seems to have taken some optimism from the big beautiful bill, and they're hoping that will spark a capex rise, which will offset any negative impact of tariffs. Even through the night, the market's got a little bit stronger as President Trump indicated that he might be willing to negotiate with the EU in spite of sending the letters last week. So it seems that the market isn't so concerned about tariffs. I think that's probably a little bit too optimistic, and we're at record levels in terms of the US market. So as you said, heading into reporting season, that will be a very, very critical time, both in Australia and in the US. We'll start to see the impact of any tariffs that have been imposed so far on companies, but then we'll also be looking at guidance and sort of seeing what the economic activity is in relation to those companies. So yeah, certainly the US market is optimistic. We'll see how long that lasts.
Yeah, are you saying overly optimistic then, with the potential that perhaps there could be some shocks, particularly as far as guidance is concerned?
Well, potentially, yeah. I mean, certainly as far as the tariffs are concerned, I think the US market seems to have brushed it off. Obviously, we had that big market reaction back in April, but now it seems to have not being concerned about the impact of tariffs. I think that we will start to see some impact there on some of the large trading companies. Obviously, in the US, the big value stocks are in there, the Mag 7, so they're not necessarily going to be as impacted as a lot of the industrial trading type companies will be. But certainly, the US economy still seems to be travelling along fairly well, and I think that's what the market is focusing on, the fact that we do have, or that the US does have, a strong consumer, reasonable economic activity, and it seems at this point in time there hasn't been too much of an impact from tariffs, but they're looking very short term rather than long term at this point in time.
Now, David, today there's also a focus on China. We get a data dump, in fact. What are we likely to see there, do you think?
Yeah, you're right. We're certainly in Australia, we're focusing on China with our Anthony Albanese over there this week, talking trade and our relationship with China. We have seen some data come out already. We've seen their money supply and credit growth, and China has been stimulating their economy to some extent, but not to the extent that we've seen in previous downturn cycles. So there has been an increase in money supply of about 8.3% year on year, and broad credit growth has been up about 8.9% year on year in China. And we've also seen some trade data that's come out, which has actually indicated that their exports are up 5.8% year on year. And interestingly, there's been a shift in trade. So there's trade or exports to the US down by 16%, but they've replaced that with trade with other regions. So the Asian markets are up 17%, Euro is up by 8%, and Japan up by 7%. So we've actually seen a record trade surplus coming out of China of about $115 billion US dollars. So at this point in time, China hasn't been overly impacted by the discussions from tariffs. They've just shifted their trade around the world. But then today we'll also see further data, the second quarter GDP coming out of China, retail trade, and also industrial production coming out of China as well.
What's your view on the iron ore price at the moment? It sort of defied expectations, really, sitting close to 100 a tonne.
Yeah, it has. It's held up relatively well. We are still seeing reasonable demand from China in particular, but also demand for iron ore around the globe. there has been expectations that the Chinese economy will slow, but they are still growing at over 5%. And as I said before, they are starting to stimulate their economy a little bit. So I think there is that ongoing demand for iron ore. I don't think it's going to fall off the cliff. And we've actually seen that the large miners here, BHP, Rio, Fortescue, their share prices have come off quite a bit and are actually looking relatively attractive at current levels.
What's your expectation for the local market today, David?
Look, I think the local market, will probably take the lead from overseas in the US, and the European markets were stronger as well. So I think we will start to see a bit of a positive market today. There will be some data out from the June Westpac consumer sentiment number that may have a bit of an impact on the market. And then I think it'll be more company-focused issues. We've just seen the release of Hub 24's quarterly inflows, and that seems to be a very, very positive number. So, we could see a little bit more, strength in the Hub 24 price. So I think it'll be more local issues, and then. As we mentioned at the start, looking forward to the reporting season, and analysts are starting to do their numbers ahead of what might be coming out in August.
Now, David, beyond what we're seeing in equities, which you're saying perhaps is inexplicably optimistic, what we're seeing on markets there, turning to crypto, goodness, Bitcoin continues to climb to record highs.
Yes, extremely optimistic there as well. We saw that record high of 123,205 overnight. It's drifted off a little bit to be under the $120,000. But they're talking about crypto week in the US. Congress is debating a bill which will look at the cryptocurrency regulations as well as being in favour of stable coins. So there's a fair bit of discussion in the US about crypto in general, and Bitcoin obviously is the leading indicator there. So we're seeing a fairly positive market as far as the cryptocurrencies are concerned.